president of GUTA. Can you wave so the others see you? This is the first time we are having them join us, and we think it is important they gain an understanding of what we do. So for the next 2 days at least, he's going to be here to observe the presentations. Then we have Professor Alagidede. Prof is doing a very important work for us. We have a chair at the Department of Economics in Legon and Finance, right? And Prof is sitting on that chair. He is going to be conducting a lot of research. He is going to be engaging in a lot of work for the bank, and we are happy to have him also join us. Prof, you're welcome. Feel free, if you have any comments in the process, please speak out. We are in this together. Then we have the media also joining us. This time is part of the innovation. We want the public to be engaged. The public must be aware when we begin these discussions. And so the media is here only to cover my opening address, and then they will leave us alone. And on Friday, when we are set, when the committee is set on its statement, we'll have the press statement soon after the decision is taken. So this time, we don't expect any leakage at all. If there's a leakage, then maybe something, AI or something might have come in. So members of the media, that's what is going to happen on Friday. As soon as the MPC ends their deliberations, the press conference will kick off immediately. So let me go ahead now and give some short opening statement purely for the media. Honorable members of the Monitory Policy Committee, distinguished colleagues and invited officials. Good morning and welcome to the 124th meeting of the Monitory Policy Committee of the Bank of Ghana. Colleagues, we convene at a time when Ghana's macroeconomic conditions are exhibiting early signs of stabilization, supported by recent policy actions and improving external and domestic fundamentals. But the path ahead remains complex and fraught with risks, both global and domestic. And this underscores the importance of today's meeting and the decisions we are set to make. Let me begin, colleagues, by acknowledging the robust technical discussions which took place during last week at the staff level meetings. The enriched format now involving both our internal advisors, as I have introduced them, as well as the external MPC members. This new framework has significantly sharpened our focus on key policy issues, and I encourage staff to maintain this momentum as we delve into today's presentations. Since our last meeting, we have witnessed further moderation in inflation. According to the GSS, the inflation rate declined to 21.2% last month of April, down from previous highs, but still well above our medium-term target band of 8 plus or minus 2%, and breaching the upper consultation band of 19%. This path has been shaped by a combination of monetary tightening, relative exchange rate stability, and easing non-food inflation. In March, the committee responded decisively to the inflation outlook by raising the policy rate by 100 basis points to 28%. Preliminary evidence right now suggest this action has contributed to dampening inflation momentum. And importantly, the cedi has appreciated sharply by nearly 19% between April and May, helping to ease imported inflation pressures and restoring public confidence. The appreciation of the cedi reflects a combination of factors, including prudent monetary policy, the improved market sentiment, as well as the external sector gains that we are witnessing. We are also seeing encouraging signs of macroeconomic progress. For example, Ghana has reached a staff-level agreement with the IMF regarding the fourth review of the ECF program. And although some prior actions remain outstanding, the trajectory is clearly positive. Now, you also would have heard about the recent S&P upgrade of Ghana's sovereign rating from a selective default to CCC positive, which further affirms this progress. Our external reserves have strengthened, and the trade balance has improved, as well as the consumer and business confidence indices rising steadily. However, significant challenges persist. The inflation outlook, while improving, remains vulnerable to second-round effects. Food supply constraints are still with us, especially from northern Ghana and the Sahel, and external price shocks, particularly given volatile global commodity markets. There are also geopolitical tensions and evolving global trade dynamics, including the recent US-led tariff disputes. These have heightened market uncertainty and could affect commodity prices, could affect exchange rates, and could affect financial flows in emerging markets like ours. In this context, colleagues, the bank has commenced a comprehensive review of its monetary policy implementation framework. We are transitioning from reliance on the unremunerated cash reserve ratio to a more active open market operations regime, including the use of longer tenor BoG instruments as we announced at the maiden MPC that I had. This is intended to enhance policy transmission, it is intended to improve liquidity management, and it is intended to allow greater room for credit expansion to the private sector. Colleagues, as we approach our deliberations, we must carefully assess whether the current monetary policy stance remains adequate to drive disinflation without undermining the fragile growth momentum we have currently. A number of policy questions that confront us for the next 3 days include: 1, whether the observed exchange rate appreciation is sustainable. And we are having members of the media asking these in the last couple of weeks. Another question is how durable the nascent return of market confidence could be. A third question that confronts us is about what the implications are for these dynamics regarding our inflation forecast over the medium term. I must also emphasize, colleagues, the critical role of our post-meeting communique. It must clearly articulate the rationale behind our policy decisions and provide an accessible, transparent account of recent economic trends. This is essential for anchoring expectations and sustaining public trust in our commitment to price stability. Now let us approach today's meeting with the professionalism, with the rigor, received.